Stock market weekly chart review for the week of October 31st through November 4th. Let's kick this off by looking at the S&P 500 and the different sectors that make up the S&P 500. The reason why we're going to be looking at the S&P 500 is we use the S&P 500 as a proxy for the overall market. Generally speaking, whatever the S&P 500 is doing, the overall market's doing, and whatever the overall market's doing, it has a lot of impact on an individual stock. So we're here at Yahoo Finance. We got the S&P 500 under holdings. We see the sector weightings. You can kind of scroll through here with your eyes, or you can run your eyes down here. But for me, my eyes are drawn to this a little faster. We see technology a little less than 24% of the S&P 500, followed by healthcare, which is a tad bit over 15%, and then financial services, which is just a bit over 13%, consumer cyclical, 11.39. Then I think we go down to maybe industrials at 8.27, and it keeps going lower from there, but we're going to look at those sectors. And I've got a correlating ETF with each one of those. XLK is for technology, XLV is healthcare, XLF is financials, XLY is consumer cyclical or discretionary, and XLI is industrials. Right now we're looking at the S&P 500. We got a weekly chart, so each one of these bars represents 1 week of trading. We're looking at 2-year time frame. This red and green stuff at the bottom is volume. See, the volume is a little bit over 320 for this week, and it's red, so that means it's a selling week. More sellers than buyers. This red line right here is a 200-day moving average. This bluish line right here is a 50-day moving average, and this lavender or purple line is a 20-day moving average. And we see the trading range this week was below that 20-day moving average. It opened up here at this top and closed down here, traded a little bit lower than 370. This high up there, a little peeking up a little bit above that 398. But opened here, closed here with that trading range. You see, a couple of weeks ago, it was down here testing this 200-day moving average. Rallied up, and now we're here looking to the left. We see that it's been stuck here before, right? During this time, it was stuck on the top. When it broke through, it was stuck on the bottom. Broke out of that range. Kind of got stuck a little bit in here, just a little bit, with looks like basically 2 days. On the third day, it broke through. And now, kind of back in that same area. If we look to the left even more, we see kind of similar price congestion in there. So overall, down week. Now, the S&P 500 is made up of these sectors and some other sectors, but these have the big weightings on them. Little uptick in selling volume compared to the last 2 weeks of this buying volume. And I don't know what it's averaging out at. Testing that 200-day moving average, right? Now this, 3 weeks ago we tested it, and then this week rallied up. This week rallied up, but basically with 1 week we're back down, right, kind of in area where we were 3 weeks ago, which is in line with this just downward trend. But we're above the 200-day moving average, so that is good in that regard. Healthcare not only above the 200-day moving average, quite a bit above it, and above the 20-day moving average, but battling that 50-day moving average. see it's been some wide trading range, but it was able to, over the last month or so, a little bit over a month, 1, 2, 3, 4, okay, last month, rally up, breaking those moving averages, but now kind of back to battling them. Seems like we're going to have some price resistance right in here. The financial sector, good old spindle candle here, right? Trading range a little bit longer on the bottom, almost opening and closing in the exact same spot, which could be movement to the downside. It's basically like, well, here we had prices flowing down. We had the spindly candle. Only difference is this one is selling, this one's buying, and look at that, selling came in even more, rallied up a little bit, and boom, really sold off. So maybe, maybe that's what we're going to see, some more selling. But usually, at minimum, these type of candles can give you insight into like digesting information or kind of slowing down in momentum. Can't always be just like big bars up or down, right? So sometimes it's figuring out what's going on. And this will be interesting to see what's going to happen next week with that. XLY, consumer discretionary, below all 3 moving averages. Not looking too good. Probably gonna, if we break this 135, it seems like it's gonna come down pretty heavily, but it's right now it's getting the support right in there. Industrials, well, a little bit is hitting some resistance here, right? We're stuck in this resistance range, but we're still at the top part. We closed a little bit higher, right? Opened here, opened in like the top 10% of this candle, and closed a little bit higher. It's battling that 50-day moving average, but still we got this progressively lower highs, and we see that reflected in this 50-day moving average turning over. So based on that, it looks like sooner or later it's going to be heading down. This is a line chart for 1 week interval, the max amount going back, and maybe I got it zoomed in a little bit. So we got a bit of this channel that's been going on since basically the beginning of this year, kind of the end, maybe it was the end of 2021, beginning of 2022, right in that area. Basically the market started dropping, and it's been dropping down but rallying, dropping down, rallying, dropping down, rallying, as it just kind of creating this channel that it's been dropping down in. And we got as low as being down here around this 357-ish area, which may or may not be one of your favorite numbers. And then now we're up here around this 376 area, and see this little point right here? So it made this little W, right? So double bottomed here, not going any lower, went higher out, retested that bottom, then really shot up. The point that it shot up at, if you look to the, it's right in this area, right? See how that line goes across? Getting right in there. So what I'm wondering is, are we going to break out of this downward channel with a grind sideways? That could potentially, like, maybe building, maybe in a trading range from about right here to about right there, and just kind of grind sideways out. Of course, we could go sideways for a while and then maybe resume an uptrend or go down. But that's a possibility that it could grind sideways until we see it really break below that 357-ish area. Until we see that, then it could potentially grind sideways. We see that it's this shot to the upside didn't work. It could could potentially build a base here and then go more upward, but with everything else that's just happening in the world and in the market, like that doesn't seem to be happening at the moment. So my prediction for this coming week is it's going to go up, down, or sideways. That's a weak prediction, isn't it? Go to ihavesuccess.com, not indeed.com. Go to ihavesuccess.com. Download some stuff. Learn how to sell cash secured put options on the stocks that you don't mind owning the rest of your life if you had to. And your life will be a lot more fun when you're making some money trading. You might have to do some paper trading first. You might have to. Might behoove you. You guys have a fantastic weekend. I'm going to bed. Bye-bye.